Hello everybody. I'm looking at all things Chinese this week because after tomorrow's new moon, it is the Lunar New Year holiday in China. It's their most important holiday of all, and for those of you who want to be really show-offy, it's the year of the white metal rat coming up. So there you go, that's a little bit of astrology for you. My first chart is of the offshore Chinese yuan against the US dollar. And you can see from over 7 yuan per US dollars, it has retreated the end of last year, beginning of this year. Now look towards the right-hand side and you can see 8 consecutive down candles. Those are the red ones. That's important. It's called the rule of 8. And any market that moves in one direction only for 8 to 10 consecutive periods, the trend is extended and it's due a correction. And I wrote this for the South China Morning Post, and sure enough, here we go. This week, unfortunately, on the terrible news about the respiratory virus, we've seen a turn in the trend with the bullish engulfing candle. That's the blue one on the right. So this suggests that that strength of the yuan is over, and we're going to revert to what had been a tendency towards weakness. You can see that for most of 2019 it was getting weaker, i.e. you needed more and more yuan per dollar. My view is that we're going to trade up to the psychological 7 yuan again, and then we'll see how we get on. I should add that the onshore yuan looks very similar, so they're running neck and neck, these two, as they have done for a very long time. My second chart is also China related, is the Hang Seng China Enterprises Index. Some people call it the red chip. It's basically mainland companies that are traded in Hong Kong with quite a high dominance of state-owned enterprises. And this one spent the second half of 2019 creating a rounded bottom, rather irregular. Some people might say, well, it's more like an inverse head and shoulders, and so therefore I've drawn a sort of neckline in there. That's the almost horizontal line. And sure enough, we broke above it, made some modest but steady gains over 4 weeks, and now it's suddenly come to a juddering halt. And you can see that it was stopped by what I call a secular regression resistance line, and that's a line that I've taken. It's slightly irregular, but it's taken from 2008. And now we've got a massive red bearish engulfing candle there, which has engulfed all previous 4 weeks. Obviously, we've got to get through to the end of Friday. And then don't forget that mainland China is on holiday, so we won't have much follow through there. But that's certainly one to watch. It is the worst performing index in China-related indices, stock indices this week. That's why I've picked out this one. But Shenzhen, Shanghai, and the CSI 300 are very similar, and they're actually now off for the year. They're down on the year rather than higher. And my final chart is the yield on a 10-year Chinese government bond, a sovereign bond. And again, you can see that the trend is very much down. It backs up every now and again, meets a trend line, down again. And now, since the middle of last year, we've been sort of forming a very large right-angle triangle. This is a continuation pattern, and it suggests that we'll break below the psychological 3% yield, and my next target will be 2.6%, which is the lowest it got to in 2016. So there you go, roundup of China-related charts, and my best wishes for the new year for all Chinese people around the world.